At Moody's, right, we approach this carbon transition plan through our net zero assessment framework. So it's a forward-looking, independent assessment of the issuer's decarbonization target vis-a-vis net zero global pathways. And what we are assessing is that there are three pillars. The first one is the ambition, right? When the extent to which the issuer's ambitions are in line with 1.5 to well below 2 degree scenario. And here we are assessing the issuer's entire value chain, scope 1, 2, and 3. What is happening upstream, what is happening downstream. So this is from the ambition point of view, what are the targets they have set? And we will use the regional sectoral pathways to benchmark the issuer's ambition to be in line with 1.5 to well below 2 degree scenario. Then the second important pillar is about implementation, which is about the credibility of execution. And here we are looking into whether the issuer has a sound plan in place, which is supportive of that ambition. And just what Suhan had mentioned, have to engage with the stakeholders upstream and downstream. So we are looking into the activities, what the issuer is doing in terms of their supplier engagement. Are those engagements binding, and what are the targets set for that? These are qualitative measures, but they are effective and signals the issuer's seriousness to decarbonize and is upstream. And similar goes for the downstream for asset owners. They are promoting green lease, whereby they are engaging with their stakeholders downstream. So from the implementation point of view, a strong implementation is something which is demonstrated by positive track record. The issuer's high degree of control over its own emissions over the short term, and also limited hurdles over the long term. So this is the pillar of implementation. And the last one is on governance, which is about having an effective oversight on the implementation that underpins the achievement of the ambitious target. So it starts with ambition, whether the issuer has made an ambitious target which is in line with 1.5 to well below 2 degree scenario, whether the issuer has a plan in place, and whether that plan is addressing short-term, long-term scope 1, 2, and 3. And lastly is about whether the governance is there. And in terms of governance, we are looking, as what Katrina has mentioned, whether the ESG is part of the remuneration. So it ties back and whether the board is on board to really look after the implementation part. So this is what we are looking into, is after ambition, whether the issuer has a plan, and if so, are those credible enough?